Good morning and welcome to Market Cafe. You're on ET Now with me, Lisa Fernandez, and my co-anchor, Snehisha. Good morning, Snehi.
Good morning, Lisa.
Snehi, everything's rising, the dollar index, the rising interest rates. So what is its impact on the global handover coming in?
Absolutely, Lisa. Well, when we look at the global handover coming in, starting from Wall Street, then it is not looking good at all because we're seeing some very sharp cuts coming in overnight trading on Wall Street. Now, stock futures are near flat Tuesday night following a tough session that dragged the Dow Jones Industrial Average into the negative territory for 2023. So that's some big moves coming in, sharp cuts coming in, and these moves follow a losing session on Wall Street after job openings data indicated that the labor market still strong and bond yields continued to march higher. Now the Dow lost 1.3%, notching its worst session since the month of March. The S&P 500 tumbled 1.4% and at one point hit its lowest level since the month of June. On the other hand, then you also had the Nasdaq that ended 1.9% lower, so almost 2% cuts coming in for Nasdaq as well. Those losses pulled the Dow into the red on the year. It's now off 0.4% for the entire year. So when you look at it from a 2023 basis, Dow Jones has now slipped into the red. The S&P 500 and Nasdaq, however, are up more than 10% and 24% respectively for the entire year 2023. Meanwhile, the 10-year and 30-year Treasury yields both hit their highest levels since 2007 in the session. The average rate on the closely followed 30-year fixed mortgage approached 8%, and the August job opening survey also issued Tuesday showed 9.6 million vacancies in the month, which is notably higher than the consensus estimate of 8.8 million economists polled by the Dow Jones. That indication of continued strength in the labor market concerned investors, hoping that the Fed is near the end of its interest rate hiking cycle. Now, the labor market remains a focus for investors through the end of the week. Before all the important jobs data is due on Friday, investors will parse private payroll data from ADP due Wednesday before the bell and the weekly jobless claims report expected on Thursday. Traders will also watch for economic data on purchasing and housing orders slated for Wednesday. So, well, this is what the US handover is looking like. Largely in the red, sharp cuts coming and Dow slipping into the red for the year 2023 for the first time. With that, let's shift focus to the east then and look at Europe. Europe stocks fell over high treasury yield and weak economic data, and UK retail inflation slows as food prices fall for the first time in 2 years. On the back of that, DAX was down 1% and Stock 600 was also down 1.1%. FTSE is also seeing some cuts coming in. So, well, this is what the global handover looks like, negative on the large. With that, let's shift focus from equities to commodities then, Lisa. And oil has rebounded from those 3-week low levels, and Brent has also managed to surpass the 90 levels. So, what's happening with oil?
So, right, Snehi, so even the rising interest rates, the strong dollar index, that had an impact on the crude prices as well. We saw the prices of Brent that hit the lowest level since September. That was at 89.50, while the WTI crude prices that fell to around 87.76, the weakest in September this year. And this actually, the rising dollar index, it makes the oil prices expensive, so that hampers the demand going forward for oil prices. But then today there is the producers meet, oil producer, that is the OPEC, they will be meeting, and it's expected that they will keep their oil policy that will be largely unchanged, and the supply that will remain tight for the oil going forward. So as we can see, the oil prices that has rebounded from its 3-week low, as Snehi mentioned. The WTI crude that is at around $89 per barrel, while Brent is at $90 per barrel. But if I look at gold prices, that was at its 7-month low at around 1,822 per ounce. But even that has seen some recovery. It is at $1,839 per ounce. Mild recovery, but still there is some kind of recovery for both oil as well as gold prices. So that's on the crude as well as commodity checks, Snehi.
Absolutely, Lisa. And with that, let's also take a look at all the important cues that you need to be tracking for today's trading session. And let's start by looking globally then. You've got a US, UK, Eurozone, S&P Global Composite, as well as the services PMI's numbers coming in today. So keep an eye out on that. Also, then you've got ECB Monetary Policy Conference happening today. That's another important event to watch out for. When it comes other events, then you've got the Made by Google event that will be happening today, and the very important OPEC Plus meet will also be taking place today. So keep an eye out for all of these cues in today's trading session.
Well, let's move on to some other global stories as well. Good news coming in for the US as their Treasury Secretary Janet Yellen. She said that she's very optimistic about the outlook for the economy. She added that inflation was also coming down in the short term and the labor market was extremely strong. The US is also engaging in investment programs to strengthen the economy as well as boost the productivity.
And US ace investor Ray Dalio expressed his view over the US-China relations and says it is on the brink of red lines. However, he does not see the possibility of a war. He added that there are irreconcilable differences between the world's two biggest economies, and he expects the said issues to intensify over the next 5 to 10 years.
US job openings in the month of August have seen a sudden spike to 6,90,000. This comes on the back of surging demand for workers in both professional and business services sector, pointing towards a tight labor market. Meanwhile, this jump snapped 3 straight monthly declines in job openings.
And staying with the US, but let's center our focus towards politics now, because the House of Representatives have ousted Speaker Kevin McCarthy. Remember, this is the first time ever that the chamber has dethroned its leader with a no-confidence vote. According to reports, McCarthy has said that he will not be running for Speaker again.
And shifting focus to company-specific news flows we are tracking this morning, social media giant Meta is reportedly planning to lay off employees in its Metaverse-oriented Reality Labs division. The quantum of these said layoffs continues to be unknown.
And streaming giant Netflix is planning to hike the prices of its ad-free streaming services as per Wall Street Journal. Netflix will issue the price hike in a few months after the Hollywood actors' strike ends, which could happen in the coming weeks. The price hike will be first implemented in the US and Canada.
And overall conditions will remain conducive for private investments, and the volume of foreign direct investment is also likely to grow in India as the rebalancing of the global value chain that continues. Well, that's the word coming in from Dhruv Sharma, the senior economist at World Bank, which has released the latest India development update. World Bank expects India to grow at 6.3% in FY24, and at the same time, the report also highlights persistent global headwinds, including high global rates, geopolitical tensions, as well as a sluggish global demand. Now, what do these statements entail? Where does the Indian market find a balance between emerging optimism as well as global pessimism? Let's hear out the views from the experts.
So the banking structure is very well capitalized right now. In fact, the quality of the banking financial strength is quite good. You have low NPA levels right now. You have adequate capitalization of most banks, and you have many of the banks now becoming stronger, partly because of the PSU consolidation that we have seen in terms of a large number of PSU banks converging into just a few entities, as well as we have seen a few of the private banks, particularly HDFC, which have become stronger by merging HDFC Limited. So capitalization, quality of NPAs being better, the overall strength of the balance sheets of banks is quite good, and in terms of the framework of growth ahead that the banks can provide is pretty robust.
And the world itself is getting into a deglobalized state. You probably are going to be seeing uncertainty around, global recession and how it could actually have an impact on domestic, economy as well. Because if you look at India's growth story, especially the recovery from the pandemic period, has been driven disproportionately by export, which was complemented by centers infra push, and of course residential real estate, which has done extremely well. So of course, to that extent, the share of exports will likely come down in the coming year.
Well, with that, it's time to slip into a short break on this edition of Market Cafe. But when we come back, we'll take stock of how the Asian markets have opened up this morning. So stay tuned.
Well, we are back on the show, and we are on that part of the show where we talk about what's trending on the domestic front. So let's start with the HDFC Bank. The banking behemoth has decided to revamp its top management, and the move that comes about 3 months after the mega HDFC Bank merger. And Ankur Mishra is here with all the details. Ankur, take us through the entire reshuffling and the rationale behind this move.
Yes, HDFC Bank has made changes in the top leadership, and this has been done to enhance its focus towards the leadership which it is aiming to. In fact, these business decisions has been taken so that it is aligning with their business strategy. The biggest change which is notable here is that CIO Ramesh Lakshmi Narayanan will now head the entire IT and digital business of the bank, and till now this division was headed by Parag Rao. Now he will also directly report to MD and CEO. This has been done because HDFC Bank has been focusing on the digital revamp for a while. Remember, in last 2 to 3 years there has been several initiatives which has been taken by the lender, and so as to enhance their focus on digital, this revamping has been done. Apart from that, Parag Rao will continue his existing portfolios of payment as well as consumer finance, but additional responsibility has been given as far as marketing and liability product group is concerned. Apart from Parag Rao and Ramesh Lakshmi Narayanan, the Deputy MD Kaizad Bharucha will also manage inclusive banking initiatives, Group CSR as well as ESG strategy. Group Head Arvind Kapil to spearhead the mortgage business, and also Arvind Vora, who was earlier responsible for retail branching of the bank, now he will be moving as Group Head of Retail Assets, but this will be minus the mortgage which will be headed by Arvind Kapil. Arvind Kapil and as well as Arvind Vora will directly report to MD and CEO. So all these changes has been made as stated by HDFC Bank MD and CEO to employees, that the change is being done to bring in a very sharp focus on leveraging what they have been trying to build for enhancing the execution. So this is the message which has been given by MD and CEO on the changes. The idea is clear. After the merger, the execution is the key for the bank.
Well, thanks so much, Ankur, for taking us through that. Let's get a move on then. And Tata Technologies, which is planning a debut on D Street, has shared details of its upcoming IPO. In a filing, the company said it will offer 9.57 crore shares in the IPO. Promoter Tata Motors will offer over 8 crore shares in the IPO. Meanwhile, Alpha TC is expected to offer 97 lakh shares, Tata Capital Growth Fund 1 to offer 48.6 lakh shares, and the face value of these shares will be 2 rupees per share.
Well, the Q2 updates are also pouring in. Latest coming in from DMart retail chain operator Avenue Supermart. They have reported an 18.5% rise in its standalone revenue, totaling over 12,000 crore rupees. And at the same time, the EBITDA that was up nominally by around 2.8% for Q2. Net profit also saw a jump of around 2% on year-on-year basis. Well, the company is also operating a total of around 336 stores as of September 30th, and the 4-year sales CAGR that also rose marginally from its Q1 levels. So that's the update coming in from Avenue Supermart.
Well, with that, let's shift focus to insurance then, because the insurance market is a key driver of economic growth in India, set to expand rapidly, especially in the health insurance space, projected to reach tenfold growth. My colleague Anurag Shah caught up with BC Patnaik, a member life IRDAI. Listen in to that conversation.
India is a very vibrant and dynamic country and growing economically very strong. So every country that is economically strong should be having a vibrant insurance market. So the insurance market will support further the growth of the economy. So if you see whether it is life, whether it is health, whether it is general, everywhere there is a lot of requirement, a lot of new companies are coming, people's needs are increasing, and there is something called human life value. When your income grows, you also feel that your insurance need also should grow. Yes, sir. In such a scenario, insurance is bound to grow. There is no doubt about it.
And sir, you were just talking about that presently health insurance is of around 1 lakh crore and it can go 10 times in coming years. So do you think that industry is going in the right path?
Yes, if you see, there are standalone health insurance companies. Then there are general insurance companies who are also dealing with health insurance, and they are very capable people. They are being led by MDs and CEOs who are very strong in their domain, and they have They have established a very good network of hospitals and TPAs and everything. So we can be proud as a country that yes, the health insurance ecosystem is very strong.
Yes, sir.
And a lot of people are getting benefits out of it.
So that was on the health insurance sector, but now shifting focus on the Urban Housing Finance Ministry has cleared a 60,000 crore rupees incentive scheme for urban housing, and ET now has learned from sources that the proposal of the Housing Ministry is sent for cabinet approval. Prakash Priyadarshi has more details on this. Over to you, Prakash.
Yes, an important development coming in as government is well set to launch a new home loan scheme for urban poor and middle class. So we are learning from our sources that the Finance Ministry has cleared the proposal of Housing and Urban Affairs Ministry. We are given to understand that the Expenditure Finance Committee of the Finance Ministry has approved approximately 60,000 crore as an overall financial outlay for this scheme. So it's an important development coming in as far as housing sector is concerned. Sources are also saying that it is now up to Indian Cabinet to give its nod to this scheme. However, final approval from the Indian Cabinet is expected anytime soon. Moving ahead, we are also given to understand that as per the proposal of the scheme, government is planning to provide benefits of interest subvention to the urban poor and middle class under this scheme. Consumer can get benefit of interest subvention on housing loan up to rupees 50 lakh. In addition to that, when it comes to benefits of interest subvention, that would be in a range of 3 to 6%. So that's an important development coming in. Apart from that, sources are also saying that this scheme is going to be different from previous CLSS urban scheme. Size of the house and so as loan amount would be higher under new scheme. As you are aware that the Prime Minister has already announced this scheme from Red Fort on August 15, and now the efforts are being made to launch this scheme formally.
Well, thanks Prakash for all of those exclusive details. Let's move on from one ET Now exclusive to another then, because the government will announce a waste management policy next week. ET Now has learned from sources that the policy will incentivize state municipal bodies for effective waste management. Among many benefits, the policy will unlock 24,700 acres of land. Sameer Dikshit has more details. Over to you, Sameer.
The central government is actively moving forward to address the big issue of urban waste. So the Road Transport Ministry and the Urban Development Ministry, they are working closely to formulate a new policy for the urban waste management. What we are getting to know from our sources that the state municipal corporation, they are going to be a key stakeholder. So as per the new policy, the central government will incentivize the state municipal corporations for setting up of new urban waste management unit, and these new or modern unit will help in segregating the waste. For example, the plastic will be separated, it will be segregated, the biodegradable waste will be segregated. Moreover, as per the new policy, the road construction, the NHAI or the other central government will be using the plastic waste for the road construction, and this will help the government to reduce the cost in terms of road construction by around 15 to 20%. Stats suggest that alone in Delhi and Mumbai, the accumulated urban waste is somewhere around 240 lakh tons to 260 lakh tons, and this new policy will help to address this big issue. Moreover, the central government suggests that around 24,700 acres of prime land, it is being not utilized properly. It is being sort of encroached because of this urban waste. So as per the new policy, it will help to decongest or unlock the land bank which is in the prime location, and then it could be properly utilized. So the government is currently looking to come up with a new urban waste management policy, and it is very likely that this policy will be released by the government by mid of October.
Well, thank you, Samir, for sharing your perspective on the new waste management policy. But South Korean automaker Hyundai Motor is planning campaigns around the Cricket World Cup starting tomorrow. That's an exclusive coming in, with a hope that such campaigns will give a fillip to its sales. The automaker also announced that it has decided for voluntary participation in the recently introduced Bharat NCAP, with 3 models to begin with and more models to follow.
Car buying is all about sentiment, positive sentiment. I think it's a very positive, good time. If you see when I talk about country, you know, GDP is growing much faster than the world economies. If you see GST collections, very consistent and very good. Hyundai September had the highest ever total sales, domestic plus export, in our history. So I think things are looking very good. Festival season, Onam, Ganesh started on a very positive note, 9 to 10% growth. We can expect a very good festival season. Of course, hopefully India will win the World Cup, which will further add to the charm and the passion, you know, of the countrymen. But I think festival season anyway, we in auto industry are always looking at with a lot of optimism. This year especially because the stock levels are good, semiconductor situation is behind us, which means that many customers who could not actually last year or last year get delivery in the festival. This year, many customers who would want to book as well as get the delivery will be able to do so.
Alright, with that, let's slip into a very short break on this edition of Market Cafe. When we return, we delve into the domestic sector and look at all the stocks that could be potential buzzers in today's trading session. So stay tuned to the show.
We are on that part of the show where we'll be talking about the potential buzzers, the stocks that will be buzzing on the back of news announcements, and also on the FNO snapshot we have with us Harsh here. Harsh, take us through the FNO snapshot.
Well, yes, absolutely. So, you know, again, we had yesterday the Nifty trying to close above that 19,650 mark, but failing. We saw it close below the 19,500 mark, below the 19,600 mark, around the 19,530 mark yesterday. Well, there was a short build-up seen with regard to the Nifty Futures. Also, that indicates a bit of a negative sentiment, which is building up on the options front. Good call writing was happening at the 19,600 strike mark, indicating strong resistance at this level. And on the put side, put buying has been seen at the 19,500 mark. This indicates that traders are expecting that the Nifty will go below this level. So, you know, some amount of pressure coming through even there. Where FIIs are concerned, well, index futures, they added around 19,000 shorts. That showed, of course, some negativity. And, you know, the Nifty still seems bearish as long as it stays below the 19,650 mark. So that seems like the critical level to watch out for even today.
Well, thanks Harsh for taking us through that. And let's also take a look at the Bajaj Finance Q2 updates coming in, and AUM growth has come above previous guidance. Jefferies and Morgan Stanley also have released notes stating it as one of their top picks in the NBFC space. My colleague Vamakshi is here with all the details about these updates. Vamakshi, take it away.
Well, yes, a strong update is what Bajaj Finance has reported in the second quarter. When we look at the AUM growth that has come in at almost 33% on a year-on-year basis and nearly 7% sequentially. With that, the AUM stands at 2.9 lakh crores. And when we look at the AUM growth, 33% growth is much higher than the stated guidance that was given by the company of anywhere between 29 to 31%. In fact, Morgan Stanley believes that the company could post an AUM growth of almost 33 to 35% in FY24. When we look at the customer addition, this time around it was quite strong both on a year-on-year as well as sequential basis. Customer franchise grew to 76.56 million. As far as new loans are concerned, they stood at 8.53 million. Now, definitely this is an uptick of almost 26% on a year-on-year basis, but new loans have actually declined by nearly 14% sequentially. Not just that, when we look at the deposit growth, it was quite robust at 40% on a year-on-year basis and 10% sequentially. And the liquidity position for the company also remains quite strong. All in all, when we look at the brokerages that have come in on this counter, Jefferies and Morgan Stanley appear to be quite bullish. In fact, for both of these brokerage houses, Bajaj Finance is one of the top picks them in the NBFC space. So Jefferies has maintained its buy rating after the company's Q2 update with a target price of 8,830 rupees per share. Morgan Stanley has also maintained its overweight rating, but Morgan Stanley has hiked its target price to 10,300 rupees per share. So all in all, a strong Q2 update has come in from Bajaj Finance, and brokerages are also appearing to be quite bullish, and that is the reason you should keep an eye out for this counter.
Well, thank you, Amakshi, for that strong update coming in for Bajaj Finance. So keep an eye on that counter. But staying with the Q2 updates, let's also center our focus on banks, the likes of Bank of Maharashtra, South Indian Bank, and many more. We go again to Harsh, who will be talking about it. Harsh, you track the banking sector quite closely, so you're the best person to guide us on that.
Right, absolutely. So let's first off talk about CSB Bank. Extremely strong loan growth where CSB Bank is concerned. We'll have that chart up for you. 27% on the advances front, 21% on the deposits front. Of course, this is a relatively smaller bank, but a 27% growth is very, very healthy nonetheless. And they have a deposit growth number to match that advances growth number as well. Let's quickly take it to Bank of Maharashtra now. We're seeing good growth again from Bank of Maharashtra, 23.5% on the advances side. On the deposit side as well, 22%, matching that advances number, very healthy growth. No dilution in the loan to deposit ratio. That is a key positive as well. So you will hope to see some buzz around Bank of Maharashtra in trade today. So keep your eye out on that one. Quickly moving on to South Indian Bank, we're seeing 10% growth on the advances front, around 10% growth on the deposits front as well. Both sides, but of course this is below what one would expect something like a South Indian Bank to grow at, and therefore that is a bit of a negative. But other than that, of course, both sides of the balance sheet growing quite healthily. Then you had Yes Bank as well. Now, very interesting numbers coming in. Yes Bank has continuously seen a shift with regard to loan to deposit ratio, which was above the 90% mark. Now it's come back below the 90% mark because your loans have gone up just by 10%, 5% sequentially, which is also quite healthy. And the deposits are up 17%. You're seeing a 7% uptick sequentially in terms of deposits. So you're seeing that loan to deposit ratio shrink. Of course, that is a key positive for Yes Bank as well. So you'll have all of these stocks buzzing in trade today.
Absolutely, Harsh. Thanks for taking us through that. The banking sector will for sure be in focus on the back of this. But let's keep it with the Q2 updates then, and let's talk about Avenue Supermarts and V-Mart as well. We did address Avenue Supermarts earlier in the show, but Winnie is here with an in-depth on all of that. More details coming in. Winnie, take it away.
Good morning, and absolutely Avenue Supermart. Let's look at the Q2 updates, Q2 FY24. When you look at it, revenue on an overall basis, when you compare it, is up by 19% on a year-on-year basis. But overall, seems like the revenue pace is a bit slow as of now, and obviously what we're seeing the revenues coming in at is around 12,300 crores for Q2 FY24. That's the provisional update that has come in. Other than that, in terms of when you look at it versus the pre-COVID levels, yes, on an absolute term it's much higher, it's one of the highest, but the pace of growth seems to be slowing down. Also, store addition, when you look at it, seems like the pace of growth is sequentially a improvement that we're seeing coming in over there, and the company has managed to actually add 9 stores during this quarter. So yes, pace of growth for DMart in terms of store addition, that has improved, but revenue growth pace, that has slowed down. Revenue per square feet, that's inched up by 6% on a year-on-year basis, inching towards the pre-COVID levels, but significantly below that mark as well as of now. So yes, a one to watch out for over there. The total number of stores for Avenue Supermart now stands at 336 stores at the end of September 2023. For your CAGR sales also, when you see it, it's marginally seen a rise, but overall slow pace of growth seems like versus the previous years, keeping on that one. V-Mart too seems like total revenue from operation has seen a growth of around 8% this time. The new stores that they've added is 6 stores that they've added, and mainly income from Lime Road, that is a digital platform, that has seen a growth of around 24% on a quarter-on-quarter basis, coming in at 22 crores. And mainly the shift in the festive season from Q2 to Q3, that could lead to a delay in terms of sales from Q2 to Q3, and Q3 could see better sales, is something that is a highlight coming in over there as well. So let's keep an eye out on both these retailers, DMart as well as V-Mart.
Right, Winnie will definitely keep an eye on both VMart as well as DMart, but let's look at the other stocks to watch on for this trading session. Starting with IDFC, First Bank will be in focus as they have launched a QIP for around 3,000 crore and the floor price has been set at around 94.95 per share. Maruti Suzuki will be another stock that will be in focus. They have received 2,160 crore draft income tax assessment order, and this is for FY20. Stocks that will be in focus as CCL Products, as NJ Mutual Fund bought around 0.5% stake in the company, and Adani Enterprise Abu Dhabi's IHC, they have raised a stake to above 5%. But Snehi, what are the other stocks that will be in focus today?
Absolutely. There are a whole bunch of other stocks that could be potential buzzers in today's trading session, and Hero Motor Corp will be in focus because Harley Davidson X440 deliveries will commence from the 15th of October and the new booking window will open from 16th October. Another stock that could be in focus today is Raymond. It has been approved to invest an amount up to 301 crore rupees in one or more tranches in 10X Realty Limited, which is a step-down wholly owned subsidiary. Strides Pharma could also be a buzz today because it has received a US FDA approval for its fish oil drug and it will be introduced into the market immediately in partnership with a leading generic company. Next stock in focus could be Titagarh Rail Systems. The company has inked a contract with Gujarat Metro Rail worth 857 crore rupees. And lastly, RVNL could be a buzz today as it has emerged as the lowest bidder for the infra project in Himachal Pradesh worth 444 crore rupees. So keep an eye out on all of these potential buzzers in today's trading session.
But with that, viewers, we are completely out of time on this edition of Market Cafe. But do stay put on this channel as we have the next show, the market, coming in. So stay put on the channel, and it's a goodbye from me as well as Snehi. Thank you for watching.